This is NDTV, and you're watching NDTV Profit.
Room behind us. Let's move on and get an expert view on this. With us, Girish Pai, Head of Equities at Centrum Broking. Also with us, Prasad Koparkar, Senior Director at CRISIL Research. Very good afternoon to both of you. Sorry if I've kept you waiting. Girish, I'm going to start with you. What's your broader take on the earnings season from Q4? What would you anticipate you would see broadly from the, say, the Sensex universe right now?
See, I think the Sensex earnings should be on an aggregate basis in line with the full year numbers in terms of growth. I think it should be delivering somewhere close to 10%. But there are swing factors here, swing companies in one sense. I think there are 3-4 companies which could potentially determine whether we're going to continue with the downgrade cycle or whether the downgrade cycle is going to come to an end. One such company is ONGC, because we have close to 1.4 lakh crores of under recoveries in the oil sector right now. And if you look at the budget papers, which is taken into account something close to 78,000 crores, the upstream companies should potentially throw up a negative surprise in terms of profits. And my analyst believes that ONGC could potentially throw up a loss for this particular quarter versus market expectations, which are fairly positive, because markets expecting an under recovery sharing of close to 38%, thereby delivering a net realization of close to $40 odd, whereas my analyst believes it could be potentially negative, because he thinks that the under recovery sharing for the upstream companies could be potentially 45% of the total number. That's one. Second, I think, is SBI. Last corresponding quarter last year, FY11 Q4, SBI delivered just about 20 odd crores because of a whole lot of one-offs. This year, our analyst expects close to 3,700 odd crores. The question is whether that's the number that's going to come out, or whether we're going to see numbers. I've seen numbers of 3,200 and 41, 4,200 or thereabout. So it depends. That's the other number to watch out. Tata Motors, in my opinion, is the other big company which can potentially deliver surprises. There are big expectations from that company. The stock has outperformed significantly. There is an expectation that the margins would at least hold up on a consolidated basis, and profits for this quarter could potentially be higher than 4,000 odd crores. My analyst is expecting somewhere in the region of 3,700 to 4,000 odd crores. So I think these are swing companies, so to speak, which could potentially determine the full year earnings numbers and what the picture will look like going forward. And from an FY13, FY14 perspective, if you look at the...
Just interrupt you there before you get to FY13, because, I just want to get, the other side of the story from a debt, from a ratings perspective. Let me just get in Prasad. Prasad, what are your anticipations? Some of the swing companies being talked about, I'm not sure if you want to talk about individuals, but, from a ratings perspective, a debt perspective, what do you think qualitatively this quarterly earnings season could shape up like?
Yeah, I think, we have done a study across about 26 sectors spanning about 227 companies, and our take is that both in terms of revenue growth as well as EBITDA margin, the pressure is going to continue. Over the last 6 quarters, we have consistently seen revenue growth coming down from close to about 25 to 30%, and in this quarter we are expecting revenue growth to be just about 15 to 16%. Similarly, on the EBITDA margin, we are saying on a YOY basis, excluding financials and PSU oil stocks, we expect EBITDA margins to decline by upwards of 200 basis points. Okay. And this is something that we have been seeing for some time now. If you look at only Q4 versus Q3 on a QOQ basis, which is what the market looks at nowadays much more closely, there might be some respite. You will see actually about 100, 150 basis point improvement in EBITDA margin. Okay. But we think it is more of a usual seasonal effects which you see in the fourth quarter.
Okay, Girish, coming on that, actually, I'm just going to get Girish's view on the margin picture as well. Girish, broadly speaking, how are you seeing corporate margins plan out again over the universe that you cover, and what is then the outlook going into next year, early next year at least?
See, I think margins are under pressure largely because the costs are going up in the system, and as mentioned, the sales growth is not really very high, so the fixed costs are being probably amortized over a smaller base. So that is contributing to the margin pressure in general across on an aggregate basis. Going forward, we think that will continue as long as the GDP growth is not upwards of 7.5% or 8%, I think that will be the issue going forward. I mean, are we going to see GDP growth upwards of 7.5% going into FY13 and FY14? If that kind of number comes through, I think the margin pressure will be a little lower. But should the number be between 6.5% and 7%, I think issues connected with margin pressures will arise. Issues connected with asset quality will arise, which means that the credit costs of the banking system will probably be going up into FY13 and FY14.
Do you think that could be a pressure point as well, Prasad, going into next year, the financial sector?
Yes, I think on financial sector, we are seeing some pressure on asset quality. If you look at NPA plus restructured assets, clearly the picture is not looking very pretty. And I agree with your other guest, that unless we see some improvement on the overall macroeconomic environment, you are likely to see the asset quality pressure persist even in FY13.
Girish, just a quick last word. I'm a little short on time today, but I do want to get your sense on if the expectations pan out the way you just outlined for us. Just on the basis of earnings, do you suspect there's an upside on the market, or are there too many other factors at play to actually make that direct correlation?
I think the bigger picture is in terms of, one of the things is if the quarter turns out to be what market's expecting, I think that's fine. But I think there are bigger issues in terms of interest rates coming off. A month and a half back, there was an expectation that repo rate is going to come off by at least 100 to 150 basis points. If you ask people right now, I think the expectation has come off pretty dramatically. It's probably 50 to 75 bips. So that is one big issue. I think if that number doesn't come down in a substantial way going into FY13, growth could be impacted, domestic growth could be impacted.
All right, gentlemen, thank you so much for joining us today. I'm sorry I had to keep it a bit short, but thanks so much for that quick take on the earnings season. That's going to be everybody's preoccupation starting in a couple of days. That's all the time we have on Power Lunch. Thanks so much for watching. As we go into this break, I want to quickly flag off that the cabinet meeting is also likely to discuss the Vodafone tax issue. That's the news we'll track on the other side. Thanks so much for watching.
This is NDTV, and you're watching NDTV Profit.